What's going on, digital wildcatters? Welcome to another week of the Oil and Gas Startups podcast. We got a great show today with the co-founders, Samra and Vinay from WellWorth. How are y'all doing today?
We're doing well, thank you.
Doing good.
Yes.
Cool, yeah. So this episode is interesting to me, and I'm curious about the space because there's a lot happening in oil and gas and energy finance. And we're going to get into y'all's story here in a minute. But from what I talked to y'all, you come from a background in finance and then saw all the problems that they dealt with at investment banks. And so I've seen some other companies popping up in the space as well. So it definitely seems that there's some positive signal here. So I think it's going to be a good show. First, tell me high level, what is WellWorth? What do you guys do?
Yeah, so WellWorth is a cloud-based application for finance and strategy teams in upstream oil and gas. So it integrates asset-level reserves modeling with corporate-level financial modeling.
Okay.
So finance teams can either do reserves modeling in WellWorth or bring in their reserves data from engineering applications. And then WellWorth automatically generates financial statements based on that data. And then on top of that, users can model corporate items like G&A, hedges, RBL, revolver, debt investment, equity investment, and just build out a corporate model. So now the finance teams have access to asset level assumptions as well. So they can flex asset level assumptions like price tag, field development plan, P&A scheduling, production risking, and immediately see the impact on the corporate side. So they can see the impact to the full cycle economics, current capital structure, or future financing needs.
Okay. So I'm going to have a lot of stupid questions because I want to learn about the pain points of this industry.
Yeah.
But first, before we do that, let's talk about y'all's backgrounds. So whichever one of y'all wants to start.
Okay, I have a background in upstream oil and gas, equity research and investment banking. I was previously, initially with Raymond James, then KLR Group and Intrepid Financial Partners, and then decided to start work on WellWorth.
So you spent your career in investment banking.
Yes, modeling.
Okay, so modeling. So you're modeling and making PowerPoints.
Yes.
All your life. That's what your life consisted of. And what about you?
My background is in enterprise technology. I've been in that space for about 7-8 years before WellWorth.
Okay.
And around the time when we started talking about WellWorth, I decided to go to Rice University for my MBA, focused on entrepreneurship. They have a really good entrepreneurship setup. And then I graduated in 2019. And since then, I've been working on WellWorth full time.
How did y'all meet each other?
We're married to each other.
Oh, y'all are married. I didn't know
Yes.
that. That's awesome. That's really interesting. So my wife is actually a co-founder of Digital Wildcatters as well. So that's very
awesome.
That's very unique. May have to record a whole other podcast on that sometime. So that's awesome. I didn't know y'all were married to each other. So okay, cool. So enterprise software, right? Are you developer? Were you actually building software? What was your role?
Well, before WellWorth, the last time I wrote code as part of my job was, I think, back in 2010. But then my last job was with an analytics startup, and the culture and my team's interest in technology really rubbed off on me. And around the same time, we started talking about, how this is a problem, and I said we can take a shot at it. And that's when I started ramping up my tech skills. And now on WellWorth, I'm handling most of the tech side of it.
That's awesome. Yeah. So I want to talk about first identifying the problem and the pain point. I don't come from finance, so I've never worked in an investment bank and haven't done it in energy. So tell me about when you started first developing or start realizing the problem and then thinking about a solution for that. How did that really come about?
So while I was, I guess, both in equity research and investment banking, I was doing a lot of modeling. And so we realized three main problems in the industry. So there's all of these different players in upstream oil and gas. Like you have operating companies, investment banks, PE firms, minerals firms, consulting firms. Everybody is trying to do the same thing in terms of modeling, but doing it in their own silos, in their own Excel-based models, which look very similar, but they are structurally slightly different. So the main problem that we saw with the industry was that there's always an engineering team in all of these firms and a finance team, whether you have an in-house engineering team or it's outsourced. But the engineering teams always have bespoke applications. Like they have a bunch of options to choose from and they have their workflow automated. But the finance teams are always doing their modeling in Excel. And that is a problem because, it's a love-hate relationship with Excel models. People love their Excel models, but they come with limitations. Like they're the biggest bottleneck for upstream companies, especially if they have PDP assets, which then get rolled up and you don't have access to those asset level assumptions that you want to change. So that's one problem, that they're a bottleneck. Then there are multiple other problems with Excel-based models. They're slow and bulky. There are version control issues. If one person is using an Excel-based model, the other person generally tries to avoid entering that model.
Mm-hmm.
Then, according to one research, 90% of all spreadsheets have at least some kind of an error in them. And that, to us, that's a staggering number.
My model is 90% of it's an error. So yeah, I believe that.
Yeah. So, that's a staggering number, because if you're making decisions worth millions and billions of dollars based on Excel-based models, and, that's the research says that there could be some error in there, so that's a big problem. And then if you're hiring a new team member, they have to spend a few months just getting familiar with the model that you have in-house. And the biggest problem is that the top management does not get answers to questions in real time, because the top management generally does not want to open an Excel-based model and get into the weeds of things to try and figure things out. So that's one set of problems. The other is, again, as I mentioned, there's an engineering team and a finance team. And the engineering team does their work in engineering applications. Then they export that data and send it over to the finance team, right? To us, when the engineering team has done their analysis once, that's the only time that they should do it. And they should just send it over to the finance team to run scenarios themselves.
Yeah.
But what ends up happening is that their finance team then wants to change a price deck. If they have a PDP model, they have to go back to the engineering team, request them to rerun the price deck, then do the output again and send it over to the finance.
Wait, so the finance team has to send it back to engineering to apply a price deck?
Yes,
to it?
Especially if you have a PDP asset, because when you change the price tag, the end of life assumptions change.
Okay. Yeah.
So if you need to do it properly, you need to send it back.
Yeah. Okay.
Yes.
That's why I was trying to work through that workflow of why would finance have to send it back to engineering to apply price decks. But yeah, it can change the
so if you have undeveloped wells only, then people generally have an NAV model which runs standalone. So you can do that for undeveloped. For PDP wells, you have to go back.
Yeah. Even for undeveloped wells, when your pricing changes, when your well goes uneconomic, that changes, right? That means the life of your well is going to change.
Yeah.
And if you don't have all of that data in your model itself, you end up having to go back.
Yeah. Yeah, that makes sense.
So that's just the price tag. If you have to do production risking, again, like anything you want to change related to PDP, you have to go back to the engineering team. So that's the other problem. The finance team is dependent on the engineering team for every scenario analysis that they run. And a third thing is, when I was at an investment bank, I noticed that if there's a transaction, the E&P company sends over a bunch of data to the investment bank. The investment bank then builds a corporate or a model for that transaction, puts it on the VDR. And what I noticed was that model is meant to be used as is, but all the investment companies that come in and look at that deal, they end up building their own model from scratch.
Yeah,
because
everyone always builds their own model, right?
Yes, because nobody trusts a model built by someone else in Excel, because you need to QC it, like make sure it's working correctly. You'd rather just build it in your own template format.
Yeah.
And so if you're building that many models every day from scratch, even if you have a template, it takes a while to build a model. Depending on your expertise in modeling, it can take anywhere from a day to a whole week to do that modeling.
Yeah. Yeah. So, it's interesting because you made a comment, and I had made a comment back in 2018, and I was telling all these VCs, I said, hey, there's some really low hanging fruit in oil and gas. A lot of $100 million decisions are made based off of Excel spreadsheets. And that was always just such an easy way to frame it. It's like, I remember going to Exxon and they're telling me yeah, we have this model. It's called Susie Spreadsheet. And some lady named Susie made it 15 years ago, and that's Susie Spreadsheet's a real thing there.
Oh, that's so
and
funny.
Anyways, so that whole spreadsheet model issue has always been a problem, but it's interesting to think about the dynamic between engineering and finance because you have your engineering tools over here, you have your financial model over here, but there's no way to have them integrated to where, hey, when you're changing assumptions, you're getting changes on both sides. So That's where y'all are trying to create this solution?
And all of this, the biggest thing is that it just takes time to do everything, and time kills all deals,
Yeah.
So in a buyer heavy market, you could lose your deal to someone else.
Especially in oil and gas, where it's so volatile that prices can change on you at any point.
Exactly. A deal today might not be as good as it was, yesterday.
Yep.
So you need to make those decisions fast.
And for each assumption change, if you have to keep going back to another team, it's just going to add to the time required for your workflow.
Yeah.
Yep. Absolutely. So for y'all, is it agnostic to engineering tools? So if engineers, they're using Combo Curve or PhD Win or Aries, does it matter what they use?
It doesn't matter. So the way we have built it is, so flexibility was a big factor for us. We wanted to build it in a way so that people can adopt it without making a lot of changes to unrelated functions. So we don't want people to change their engineering workflow to be able to use WellWorth. So right now, what we have done is, irrespective of whether you use Aries, PhD, Combo Curve, Novi, you can just pull all the production data or the cost data into a simple Excel template and bring all of that into WellWorth.
Gotcha.
And the entire process takes anywhere between 5 to 15 minutes.
Yeah.
And largely, it's a one-time activity, right?
Yeah. If you're an operating company, you're doing making changes quarterly, you can just bring it in quarterly on a quarterly basis, and it takes 15 minutes to do that. And then you don't have to keep going back to the engineering team.
Yeah. So for y'all, when you talk about taking the product to market, and I know y'all have been working on this, and we'll talk about that in a bit, just kind of how you guys have built out the technology, kind of getting your name out there and, bringing it to the world. You've been operating in kind of stealth mode. But are y'all attacking, is this made for investment banks, or is it made for the corporate finance teams on E&Ps? Who do y'all see the first market?
Yeah. So I'd like to talk more from the workflow perspective. So A&D, M&A, FP&A is the three main workflows that we're targeting right now. Most of the A&D and M&A work you can do in WellWorth right now. For FP&A, you can build a cash-based model. Some of the non-cash items like depreciation is something that we want to work with teams to develop those features in line with how the industry wants them. But you can already model items like G&A, hedges, RBL, revolver, debt investment, equity investment, and most of the stuff that people want to model. So
that's what I was going to ask, modeling across these different assets and companies. I mean, is it pretty standard, the inputs across all oil and gas deals, to where you can make a software like this that, this is going to cover everything someone needs?
Yeah, most of them are. If there is so the good thing is that our software also has an Excel add-in, which gives you a dynamic model which can be exported into Excel. So it's not a hard-coded model, it's a linked model with formulae and everything. So if there's something that somebody does which is bespoke to them, then they're not stuck in WellWorth. You build a model, an asset level model or a corporate model in WellWorth, that you get the whole export with formulae in Excel. On top of that, if you want to build something, you can. And also, it doesn't take us very long to build features. So if somebody says, okay, I like everything else, and there's just one thing that I want to add to this, we love to get feedback. And we've done it with a few people previously where we've built features out when they've asked us to build them.
And even before we started writing the application, right, we did a lot of research by talking to people to understand what sort of investment structures they use, how do they go about modeling it, so that we are able to understand what are the various options that people like to have. And then we build that into the application, so that irrespective of how you're modeling your investment, you can do that with a few clicks.
Yeah. I've actually seen some startups outside of energy that have built similar technologies for, I'm trying to think of the name of this one, but it's built for founders and entrepreneurs like myself that don't come from a finance background. And, I start building a model, it takes me 2 weeks and it's 90% errors. So, but making a tool that's like drag and drop for assumptions, and then you can export it into a full model. So you're seeing this out in other different verticals or applications. So it makes sense here, especially if most of the assumptions are pretty standard across the board. How do you think, this is kind of it's not a very quantitative question, but I'm curious how people react to this type of software, because I bet they almost feel some type of power with their model, right? And just like you said, like everyone goes and creates their own model. So does it make them feel like, oh, this is inferior technology because I'm just clicking and dragging my assumptions? Does it make them feel like that?
That's a very interesting question. So literally everybody that we've shown a demo of WellWorth to, nobody has ever said to us, like, why are you doing this? Why are you building something like this? They're always like, yeah, there is a need for something like this. But yes, you have to struggle if you are a new firm, you always have to struggle with the existing workflow, right?
Mm-hmm.
Yeah.
So when people are used to using Excel, but the thing that I noticed when I was working in Excel, I also love my Excel-based model, right? But when I was working on a live deal, or when I had to do something and I was time constrained, and I was structuring and restructuring models, and I had like 15 minutes to do that, I hated doing it that way. So you could still have your own models, you could still be doing work in that, but if you still want to double check something, or if you want to do something really fast, WellWorth does everything in 1 to 2 hours, which you would spend days or weeks doing.
Yeah, that's what I mean. Like, really, the value proposition to me sounds like time efficiency, to one, increase bandwidth across the team to be able to do more with less time. But just talking about like the case of, hey, you got to go back to engineering for a price deck change. Like, I mean, that's just so much time back and forth. Whereas if you had a solution to where you could like adjust some things, I was like, hey, let's adjust our price deck, and then boom, spits out the output.
Yeah.
I mean,
and we would have been in a spot of trouble had the value been only for the people actually building the models. But the fact is, it does have an adverse effect on the decision making process, right? Because right now, if you're not able to make decisions in real time, it does affect how you what's the best decision that you're making.
oh yeah,
Even on the deal flow side, right? If you have access to say 100 deals, right, a lot of them you would chuck them out upfront because of some very clear factors, right? But then there are a lot of good deals that you let go of because you're not able to analyze them in detail.
yeah.
And the fact is, you're not able to do that because it takes so much time to analyze all of that.
That's what I was saying. It's like if you increase bandwidth and time, then you can do more volume, right?
Exactly.
So yeah, I always think about it like, from my perspective as an operator of digital wildcatters, like we don't have a CFO. So I don't have someone sitting there, just hacking away at a model all the time. And we have different revenue streams in our business. And so I would love, a solution built for me where I can go in there and I can like make some assumptions, and boom, I can see in real time on our projections and of cash flows. And you don't have that ability. And it's like, I got to have to go in my model, and I'm not an investment banker. I'm not supposed to make models. That's not what I do. And like, be honest, I really don't give a shit what's in there. I just want data fed to me so I can make decisions on the business, right? Kind of like what y'all were alluding to is like, you don't want to go get lost in the weeds of the model sometimes. So
investment bankers are not meant to be Excel jockeys or PowerPoint folks. Right?
Yeah.
They're supposed to do more value-added stuff like business development.
Yeah.
So this puts them on that fast track so that they can do more value-added stuff.
Yeah, for sure. So that's, I get the value proposition 100%. It makes sense to me. Tell me about when did you guys start working on this? What year?
27, I think. Late 2016 was when we started talking about this first.
Okay.
And then when I was at Rice has this startup accelerator called Owlspark.
Mm-hmm.
So that's when we did a lot of our customer research. We spoke to almost 50, 60 customers to understand whether this problem exists, whether this problem is worth solving. And the results were good enough that we decided, this makes sense. And then
let's talk about that a little bit. So, because that's important, because a lot of times people will make a solution that they think is a problem, right? But they're not talking to enough people to see, hey, is this actually a problem for other people or a problem worth fixing? So getting into that product market fit research phase is important to see if it's worth spending your time on, right?
Yeah. Owlspark has a complete focus on exactly that element. Because a lot of startups fail because they end up building something that no one wants.
Oh yeah, most companies fail at product market fit.
Exactly.
Stage,
so it makes sense to understand whether whatever you're getting into, is it worth it, right? Whether the problem actually exists, or is it just in your mind?
Yeah.
So we spoke to all these people, and the summary is. A lot of these companies, a lot of these people, they are in some sort of a dysfunctional relationship with their Excel models where there's a lot of pain, there are a lot of pain points, but there is that fear about letting go.
Yeah.
And what we are doing is, telling them it's okay to let go and you'll be better off for it. Because you don't want to do all that repetitive, redundant work and just to get to an answer when you can get there in 15 odd minutes, right?
Yeah.
So we spoke to all these people and we made it a point to not talk about the solution. Our focus was only on the problem to understand. Talk us through your workflow. Yeah. Tell us how much time you spend on building these models. Tell us how much time you spend on, say, talking to customers or the business development side of it, right? And eventually the result was they do it and they do take pride in it, but don't really enjoy it because that's how the process is structured, right? Yeah. So that's when we came up with the idea that, it makes sense to pursue this further.
Okay, so 2019, you graduate from Rice, and then you'll start actually building it and working on it. Okay, tell me about that process a little bit. How did you guys go about actually building it? And I can't remember. I know we talked on the phone. Can't remember if y'all raised any seed capital. Did y'all bootstrap?
Yeah, for the first couple of years, we were bootstrapped completely. And then last year, we raised a pre-seed round to fund us through this next phase of development. Our focus right now is this first cohort of customers, and then we'll raise capital to build out a bigger team.
Got you. When y'all built it out, did y'all use capital to develop it, or who developed it?
We did
it in-house.
Okay, that's all right. Cool. It's always cool to hear those things. Like, we found the problem solution, we built it ourselves.
Yeah. And we have designed some processes which help us roll out features, good quality features in quick time. As in, usually if you look at software development, right, your design involves using some sort of a tool to lay out all the graphics, and then the techie comes in and builds out the product, right?
You're building everything out.
Because she's doing the product design, our design is primarily the UI built out in itself.
Yeah.
And then I just come in and add in the other functional stuff. Cool. So it helps us build out features very fast.
Yeah. Yeah. Most product development's like, okay, let's get some designs made up of Figma, and then we can send those over to the developer. Yeah. So that's really cool that you guys built this in-house, did it yourselves. Tell me about, I know y'all have a few customers, y'all are starting to get traction. Is that correct?
So we completed a bunch of trials recently,
Nice.
and we are in talks with them to sign them on as customers.
Cool.
And in parallel, we're also building out features. So recently we built out an RBL feature. So we are reaching out to some lenders as well to get to that first cohort of customers.
Very cool.
Our goal is to get happy customers first and then think about the next stage.
Yeah. You've always want some happy customers, right? Get a few happy ones and then you can start building. What do you guys think are some of the challenges? Like I know, some other companies kind of similar in the space, whether it's reserve forecasting or even data, investment banks, they'll go off of Embarrass because they know that, hey, this is industry standard. Do y'all anticipate any of those problems of having a hard time getting market penetration just because, this is, you're dealing with reserves and finance and, people are going to go get lending on this and investment. And so do y'all think that's a part of the challenge of getting market penetration is that it's finance related software?
So there's a finance team in every company that's related to upstream. And we see that the reserve side or the engineering side of the workflow has so many applications. It's getting really saturated there. But the way WellWorth is differentiated is that nobody is focusing on that integrated workflow. Or even like there's no cloud-based application that we're aware of, and customers have already, like people who are doing trials with us, they've said like they haven't seen anything like this, where you have automated financial statements in a cloud-based application and you can automate that workflow. So right now there's no direct competition out there.
Yeah.
So, but in the future there might be. So
yeah. Never
know
what happens.
Even the application, we have built in a lot of auditability so that whenever people are going through the processes, they can look at the results and build that confidence themselves that, all of this makes sense. So the companies that we have worked with, they have tested out these models and they've said, they match with the Excel models that we use.
Yeah. They're doing their due diligence.
Yes.
Exactly. And when they do that, they really see the difference in, okay, it took me this much time to build out the model and I'm able to do the same thing in WellWorth.
Yeah, if you can back test against their models and be like, we did that in 10% of the time.
And we see that initially that's the direction that the adoption would take. Yeah. As in, we don't expect to expect that companies would throw out their Excel-based processes overnight. And we are happy with that. We want them to do that because we don't want them to say, believe in WellWorth. We want them to believe in WellWorth themselves based on the data that they see.
Yeah. Yeah, I mean, that's usually how transition happens, right?
Yes, exactly.
You gotta get comfortable with it before you fully commit.
Yeah. And you mentioned like data providers like Inveris that a lot of people are using. So WellWorth really is not in competition with any of that kind of companies. It's sort of it sort of integrates really well with them. So for instance, if you're using a software like a product from Inveris in which you get a pre-forecasted stream of data for PDP wells, you can just basically copy and paste that into WellWorth and build a reserves model in WellWorth.
Yeah. Yeah, that's what I think is important too, is to be agnostic to where you can fit within people's workflows and tech stacks. That way you can bring in data or bring in, engineering tools. So, for y'all, I've known y'all wanted to get on the podcast for a long time, but you're kind of staying, quiet. Didn't want too much marketing yet, but now you're coming out to the world and saying, all right, we're gonna ship this to the market. What's the plan for y'all? Let's call it over next 6 to 12 months. Do you go try to grow this business within cash flow? Do y'all plan on raising more capital? What's y'all's thoughts?
Yeah, so we want to convert a few customers in the coming few months, and then after that, we're going to raise a round to build a team.
Cool.
Yeah, we laid out a process right up front about, these are the milestones that we want to hit. So last year, our focus was on the beta tests, where we were building features in line with the feedback that we were getting from the beta customers, in line with the features that they wanted to see. Now we have moved out to a trial phase where it's almost a complete product and people can just plug it into their workflows, right? So now we want to get to that set of happy customers, then raise capital to build out the next set of features. There's a lot of stuff that we want to do. And right now, the difficult decisions are, what not to build rather than what to build.
Which is something to be said for that. I mean, one problem is when you have a lot of opportunity, being able to stay focused on core features and the core part of the model and listen to feedback loops too from your customers. Because we deal with that a lot of digital wildcatters. There's a lot of cool shit we want to do. And sometimes we just don't have the time, resources, or bandwidth to actually go pursue it.
It takes a lot of discipline because it's very easy to lose focus. It's very easy to spread yourself too thin.
Yeah.
So you need to be focused on the core stuff that you want
absolutely.
to do.
Especially when you're still, fairly bootstrapped in the early stages, limited team bandwidth.
We love to think like, okay, just the two of us who've finished a product.
Yeah.
Like imagine what we can do with the team. Like there's so much stuff we can build so much faster.
That's what Jake and I always said is like, do this with just a few of us. Like when you actually have a team, think about what you can achieve then. So which is also funny. We could do a whole nother episode about this, but you think it's that easy, but then all the people come, you start getting people problems, and that's when things get fun. So your problems always shift. Like you always have problems in a startup and a business. They're just new and different problems.
Well, that's how life is as well.
Yes, for sure. There's always going to be problems. So, okay, if someone's listening to this show and they want to check out WellWorth, where can they find y'all? What's the website? Are y'all on LinkedIn? Where are you at?
So we're on LinkedIn as well. And our website is wellworthapp.com.
All right, wellworthapp.com.
Yeah, and my email is samra@wellworthapp.com. Vinay's is vinay@wellworthapp.com.
All right, cool. Everyone's feeling very liberal with their sharing of contact information today. So our podcast before this, he gave his cell phone number on the podcast. And so I'm like, y'all are going to get spammed probably. Hopefully not. But all right, guys, if you thought this show was interesting and you're really curious about WellWorth, it sounds really interesting to me. I just think that, this industry's always had a problem of running decisions off of spreadsheets. And it sounds like from my conversation today, one of the big problems is it takes a long time to do that on spreadsheets. And so I think WellWorth's really interesting. Make sure to check them out. Appreciate y'all coming on the show today.
Sure. Of course. Thank you for having us.